When the market crashes, the 99% stop acting like architects and start acting like prey. They see the red data on their screens, and their amygdala takes over. They sell at the bottom, lock in their losses, and retreat to the sidelines exactly when the greatest wealth-building opportunities in history are being created. In the machine-like grind, we understand that a crash is simply the market going on sale. To reach the 1%, you must have a panic-proof protocol. You must decouple your emotions from your assets and realize that volatility is the price you pay for admission to the 1%. The first principle of panic-proofing is the liquidity moat. People panic because they are over-leveraged or cash poor. If you need your investment capital to pay your rent next month, you are a fragile node. The architect ensures they have a massive cash buffer, the emergency shield, before they ever enter the market. When the crash hits, you don't care about the daily price of your assets because your operational capital is secure. You are playing the game from a position of strength. You don't have to sell because the machine has enough fuel to wait out the storm. The second principle is the horizon realignment. A market crash is only a loss if your exit date is tomorrow. If your systemic goal is 10 or 20 years away, a 30% drop today is nothing more than statistical noise. The 1% do not look at their portfolio value daily, they look at their share count or asset units. They realize that during a crash, their dollars buy more units. They shift their focus from price to volume. They aren't losing money, they are accumulating assets at a discount. By lengthening your time horizon, you turn a catastrophe into a high-yield event. The third principle is the automated execution. You cannot trust your brain during a crisis. It is hardwired for survival, not for sophisticated financial engineering. To be panic-proof, you must remove the human element. You use dollar-cost averaging, DCA, an automated system that buys assets on a set schedule regardless of the price. When the market crashes, the system automatically buys more units for the same price. You don't decide to be brave, you simply allow the pre-programmed code to run. The machine doesn't feel fear, it only follows the directive. The psychology of the 1% in this domain is one of contrarian logic. They have trained themselves to be fearful when others are greedy, and greedy when others are fearful. They understand that maximum pessimism is the point of maximum opportunity. While the media is screaming about the end of the world, the architect is clinically scanning the wreckage for high-value components at fire sale prices. They realize that the world has survived every single crash in history and emerged stronger on the other side. They bet on the persistence of the system. To execute the panic-proof protocol, you must perform a stress test. Ask yourself, if my portfolio dropped 50% tomorrow, would I be forced to change my lifestyle? If the answer is yes, you have a structural weakness in your liquidity moat. Fix it immediately. Second, turn off the noise nodes, delete the finance apps, and stop watching the crisis narrative on the news. Third, ensure your automated buys are active. You are moving from a reactive participant to a sovereign observer. The market is a device for transferring money from the impatient to the patient. If you want to be rich, you must be willing to be bored and disciplined when everyone else is terrified. Audit the moat. Ignore the noise. Trust the code. The machine is now unbreakable. If you are ready to stop being a victim of the fear cycle and start engineering a 1% future, subscribe. The Wealth Architecture series is your guide to total discipline. We will see you in the next deep dive.